Hey, what's going on, guys? Look, this is Investment Math. Just to let you guys know the biggest question that you've been having, which is, Marcel, how do I make money by investing in Benson? I've been following you, supporting you. I want to invest, but I'm a little unsure about how this works and what the risks are and how I'll be able to make money. So look, really quickly, before we get into the video, I want to say that there is risk involved, right? And you want to make sure that you invest wisely. Right? Investing in Benson Watch has a high reward, but anything with a high reward also comes with high risk. So you want to make sure that you understand that this is a high risk investment and you should never invest more than you are willing to lose. Okay? Never invest more than you're willing to lose. And that's in any investment. So getting right into it. We'll talk about the valuation of the company. So what is a valuation? A valuation is just like what the company is worth in layman's terms. What is a company worth? And there are a few ways to approach finding valuation: assets, income combined with market and other factors. Valuation cap. This is something that you see on the campaign page. You notice that we have a $6.5 million valuation cap. Since it's too early to get a true valuation of the company, Republic has issued us a $6.5 million valuation cap, and this is simply the valuation at which we're going to be distributing our shares to the public. So we got a $6.5 million valuation cap, right? $6.5 million valuation cap. We're issuing 1 million shares. Now say we're issuing 1 million shares at the $6.5 million valuation cap. Now, how do you make money? How do your investments, how does your money convert to shares, right? Let's say $20 million is our new valuation, right? We'll take that $20 billion for the new valuation from the 6.5 and we'll divide it by 1 million shares, right? This gives you $20 per share. Now, remember, you're getting a 20% discount. So you're getting your shares at 20% off of what they would normally be. So that simply means $16. $16 is 20% off of $20 per share. So if you invested the minimum amount at $250, now you have 15.63 shares. If you invested 1,000, you have 62.5 shares. If you invested 2,500, you have 156.25 shares. Now that's a lot, right? So now we'll get into how those shares actually convert into dollars. So how do you make money? You make money when there's what's called a liquidity event. Now, what is a liquidity event? A liquidity event is either an IPO, which is, a company going public and being traded on the stock market. There's an investor buyout. So that's simply when somebody comes in and says, hey, I want to buy out all these investors and take this company to the next level with our capital. And then there's acquisition, which is actually the sale of a company, which is the route that we're going. So let's do a quick scenario. We sell the company at $150 million, right? And we add 190,000 shares to the offering. So we add that 190,000 to the 1.2 million shares that are already out there, and we have 1.4 million shares. We take 150 and we divide that by this amount of shares, excuse me, and now we have a 104.16 per share value, right? So you got the shares up here for 16 a share. So if you invested 250 at this valuation, now your 250 is worth $1,600. If you invested 1,000, now your 1,000 is worth $6,510. And if you invested 2,500, now your 2,500 is worth $16,000. Not bad for an investment of a couple of years hold. So like I said, the goal is to sell at this price. It could be higher, it could be slightly lower, but it would adjust according to the new valuation and the sales price at this given strategy. So again, if you have not invested in Benson, what are you waiting for? Get over to Republic now, follow the link, and invest today.